On these forms, I should have Brittany, my Keller William, or just my personal email.
Probably your code.
Yes. Final
Yes. Hold on. Yes.
Yeah.
Oh, okay. So okay.
Oh.
Besides, you know, the one that people pay for.
So let's do just put it on here. Do that. Yeah. So like remember expiration date. Yeah, sorry.
It's okay. It's okay.
I get her all set up. Hi. Hello.
Hello.
No. How we doing, guys? Good. Thursdays. Always got to bring long sleeves even in summertime. You should be good. I need this screen down and I passed the RPA here. Joshua went around. Oh, you know how to do it. Look at you. I don't really know that I know how to do it. Well, you seem very confident.
And you look good doing it. You're welcome. And the owl. I need to plug it into it. Yes, please. I think I have to actually plug into it. Every week it's different when I come in here.
Okay, are we good? Yeah. Zoom, can you hear me? I have to, I think, change the speaker.
I guess just turn it on. How's that? There.
And then do I keep my computer?
Hello? Zoom, can you hear us? I guess not.
I can hear you.
I can hear you.
Oh, you can. Okay, great. Thank you. All right. I need to be the host also. Serena. I need to be the host also so I can share screen. All right, I think we're all good. Hi, everybody at home. I'm going to take an RPA and I'm going to cast it up on the screen now. I think. Let's hope I can do this part too. No. Yay. Someone grab Serena. No, I'm muted. Does this happen to anyone else? Just fucking me. Great. I'm muted, so I don't. My computer's muted, so I have no way of stopping this right now, guys. I'm sorry. We're on a spaceship? Is it because there are two?
No, there, right?
I don't care how we share it. I don't know how it works. Can everyone at home hear just me now?
Yeah.
Yes. Yes, we can hear.
Okay, this over here.
Do you want the mic on?
And now I'm not casting. You turned that off entirely, huh?
Yeah.
Can you turn just the speakers and not the cast off? I need to cast the screen.
Can you cast it from the TV?
No,
Share the screen.
it's not big enough.
The TV is not big enough?
No. So every week I need the same thing. I don't care how sound is, but I need this with that, and I cast to it. I'm not finding it as an option to cast anymore. Does it just need a minute? Training room's usually on here. There we go. Thank you. Yay. Okay. At home, can you guys hear me now?
Yeah.
Yes.
Great. Share screen. All right. Okay, so for those of you at home, I do not monitor the chat box, okay? So if you have any questions, please just go ahead and feel free to interrupt me. John Farron is in the office today, so we won't have any microphones on. And I'm really sorry about all this, guys. They change this on me every single week I come in here. It's different. And they're supposed to just have it set up for me. So, and it's not like I ever ask for a different setup.
We appreciate your patience, because I see you every week struggling and you really keep your voice. So
really, because I'm super pissed off. But thank you. Okay. So we're going to go through this as quickly as we can. There is a really extended version of RPA Part 1 and Part 2 right at the beginning of this year because we had massive changes with the residential purchase agreement. Okay. With every contract, you're always going to have certain documents that are automatically included. These include these first disclosures that we're going to review right now. Disclosure regarding real estate agency relationship. You have to establish your agency. Your agency relationship is automatically established with your client, but this is a document making it official and showing that to the other agent that's going to be receiving your offer or on the offer you're receiving between the buyer and the buyer's agent. Okay. There is a separate disclosure regarding agency for seller as well. So you'll see 2 of these in zip forms. Okay. Fair housing and discrimination advisory. It's pretty self-explanatory, but if you need a reminder of protected classes, you can check out section 4. Possible representation of more than one buyer or seller, disclosure and consent. So this has to do with dual representation. So dual representation is a very clear distinction. We think of it as, oh, me as an agent, I'm representing both the buyer and seller. No, technically any 2 agents from the same brokerage, that's dual representation, okay, just by different sales agents. So when you take a listing or you make an offer, it's very possible that you have dual representation. This document's automatically included. It just gets signed every time. It protects you in that instance. Same as if you had 2 buyers you're writing for on the same property. Although you still should get permission in writing from those clients. Okay. Wire fraud and electronic funds transfer advisory. So this looks a little scary for buyers. What you need to know is that somehow when an offer is accepted and escrow is opened, at some point, people, criminals committing fraud are obtaining information, contact information for the parties involved somehow. And this is particularly damning for the buyer because they'll pose as the escrow company and send fraudulent wire instructions to the buyer. The buyer wires their earnest money deposit or closing funds that, to these criminals instead of to the actual escrow company. That money is gone. It is probably a dead deal. It is difficult, if not impossible, to get wired funds back. So make sure that your client knows any accredited escrow company is going to send them a secured email with wire instructions. Okay. And as an agent, you should take the secondary step of making a conference call between the escrow officer, your client, and yourself, and verbally confirming these wire instructions over the telephone. Okay. All right, here we are with our RPA. Yes, I don't know what the small revision was, but our documents are constantly revised, okay? Constantly. It's only when there are massive changes that they tell us anything, okay? So no matter how well you know these documents, and admittedly, this new contract, I don't know all the paragraphs by heart, but the old contract, I did. But every once in a while, they'd make a change, and so I'd reference a paragraph without looking at something, and I would be wrong. So really important, you never assume that you know the contract super well because they do just change it on us. All right, left-hand side, date prepared. This is a legal reference date. This is the date you actually drafted the offer. This is not the date the client signed it. This is not the date it was accepted, okay? This is a reference date. And so if you are lucky to have enough to have your offer accepted, if you ever draft an addendum or additional documentation later, request for repair, it will ask you what you're doing, taking this action, what this new form is in relation to in accordance with the residential purchase agreement dated, and it's going to be this top left-hand corner date, okay? It says that at the top of most of our subsequent documents that modify or add anything in our transaction once we open escrow. Section 1A, this is an offer from, this is going to be your buyer names, okay? So buyer names can be natural persons or entities. An example of an entity would be a corporation, an LLC, you know, a trust. Okay, so as a buyer's agent, if you're writing an offer, if your client wants to make an offer in the name of an entity and they are getting a loan, they're using a loan for purchase, you might want to check with their lending professional because not all lenders will allow that, okay? Also, if you have multiple buyers, all of their names need to be on here. Okay, if they don't fit, there is an additional signature addendum, but really you should probably manually type everything, type those things in on DocuSign if you need to, after you add what you can in zip forms. Okay, so if you have Mr. Matt Smith and Mrs. Mary Smith, okay, you don't say Mr. and Mrs. Matt Smith. You don't say, you have to have everyone's full names here, okay? So it would say Matt Smith, Mary Smith, right? Does that make sense? Okay. The property to be acquired is blank. So here we have our street address, okay? So, and oh, just a side note, is more than one type of residential, of purchase agreement, okay? There's residential income purchase agreement. That's called RIPA, R-I-P-A. So if there's more than one unit, you're using that document. There is a new construction residential purchase agreement. Although I don't love it, I think it's more geared for tract homes, okay? Homes that are still under development, that type of thing. I would probably use this residential purchase agreement in its place. But as far as income property, I think it's detrimental to try to use the regular residential purchase agreement in its place, okay? It covers tenancy and vacancy, stuff like that, that you need to cover in income property that isn't covered in residential, single family or condo. All right, there's also a vacant land purchase agreement. So that is vastly different. But if you understand the residential purchase agreement, you will be able to understand any of these other types of documents, or sorry, purchase agreements. They just include information that's a little more detailed, geared toward that type of offer. Yeah, for income property, RIPA, Residential Income Purchase Agreement. The vacant land one, I can't remember the name, but if you type in vacant land in zip forms in the search bar, you'll find it. And then the new construction one, I don't even know. I used it once and I hated it. It was missing a couple of things that should have been covered. I don't know why. That's why I would use this one instead. All right, so it's really important for you to get the legal city name in here. That's important because every city may or may not have different transfer requirements that are on top of the state transfer requirements. And what does that mean? Conditions for sale, things that are required for a sale to legally take place, okay? So the state has, you know, blanket terms, but for instance, City of Los Angeles, we have 2 additional requirements. Can anyone guess what those are? Any idea? 9A, LA City Building Report. The 9A report, that is the Los Angeles City Building Report. Certificate of Compliance, which has to do with retrofitting, which is a blanket term for upgrading things for safety. Okay, so you can optionally retrofit, but in the City of Los Angeles, in order to sell a home, you have to have automatic gas shutoff valve, smoke detectors, carbon monoxide detectors. You're supposed to have low flow plumbing devices, although I don't think any retrofitter actually checks for those. Water heater strapping. I'm sure there's a couple more, but you can talk to a retrofitting company if you want to learn more about that. We hire a service to do that, so we don't really need to know. All you need to know is it needs to be done. This is a seller responsibility. Typically, listing agent handles it. Okay, but as a buyer's agent, if you have a listing agent who's not familiar with the LA requirements, you're going to have to inform them. Okay, otherwise it will delay the close of escrow. So why is it so important for legal city? Well, Los Angeles is a really big city and we have a lot of what are called areas. Okay, so for instance, Westchester, Playa del Rey, Hollywood, Encino, Sherman Oaks, Studio City. These are all actually City of Los Angeles. Whereas Beverly Hills, Culver City, Santa Monica, they're their own cities. There are other, West Hollywood, there's more, but you don't need to memorize them because you can get this information very easily from a title rep or from title software in what's called the legal description. Okay, the legal description is a big fat paragraph. Sometimes it can be a few lines long, sometimes a page long. And it will say something like the 12 southeasterly feet of lot blah, blah, blah in block, blah, 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 tract number, blah, 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 located in the city of, and here's your keyword. Okay, so this is where we find our legal city.
Question for you, Kristen.
Yes.
So when you're filling out the RPA, is it better to maybe speak with title prior to doing this?
Yes, ma'am.
Okay, thank you.
But if you can't, you know, when do our clients want to write offers? When we're trying to eat dinner, right? Which means your title rep may or may not be available. All title companies will provide free title software to you where you can look up property profiles. Okay, and the property profile will always have a legal description in it. Okay. All right, here is the APN, assessor parcel number. Always referred to as APN because assessor parcel number is a long statement, right? It's a long term. This is really important. Do not leave this blank. There's a different format for each county. In the county of Los Angeles, it will always be 4 digits, -3 digits, -3 digits. If your property is in the county of Los Angeles and you see something different, there's a problem somewhere, speak to a title rep. Sometimes you will not find an APN. This is rare, but it does happen. Okay, this happens when it's new construction or when it's a condominium and it's on something called a land lease, where the building was built upon land that the owners of the unit owners don't actually own. Okay, and that's okay. So if you can't find one, call title rep, confirm that. Ask them why. Title reps are really knowledgeable. Let's see here. All right, so the next section here too is all about agency. So you're going to identify the brokerage of the listing agent, that brokerage's DRE number, then of the listing agent and their DRE number. Similarly here, if you're writing this offer, it will say Keller Williams Beverly Hills with our office DRE number, your name, and your DRE number. Okay. If you have more than one agent, I like to just do a /, no spaces, put that agent's name here, /, put their DRE number here. Okay. It's easier than the other ways. If there's more than 2 agents representing anyone, it becomes harder. All agents' names and DRE numbers should be on here. There is something called an additional broker acknowledgement. If that co-representing agent is with a different brokerage. Okay. All right. You're going to identify if that agent or that broker is representing the seller, the buyer, or both. Okay. Can anyone tell me where you can find DRE numbers? Yeah, the Department of Real Estate website under consumer, look up a license. You can enter the name, it's last name, comma, first name format. The Department of Real Estate, California Department of Real Estate. Yeah. And you'd go to the header that says consumer and then look up a license. Okay. It will be in the MLS as well, right? It will, but what about the DRE for their brokerage? I can't remember if it is or is not anymore, but it didn't always used to be. Is it now? Yeah. Good.
Do you always double check, like cross-reference?
I don't, because the MLS is operated by the local board offices, which generally have that information correct. Although I looked myself up on the Department of Real Estate website last week, and they had the address for me wrong, even though it's been right ever since I've been in this office, and now it's wrong since I renewed my license. Don't worry if stuff says like expiration date and it's past too. It takes them months to update your expiration date. So if you look me up, I look like I'm expired, but I'm not. All right, section 3A is the purchase price. Who determines purchase price, guys? Buyer. That's right. Offer price is determined by the buyer. If they're going to purchase all cash, and I wish you many all cash offers in your future, you're going to check this box and it will actually make it so that you cannot complete the sections on loan. Okay. Close of escrow. So there's 2 ways to identify a closing period. Either a finite date, the second option, which is less common, or a period of time from date of acceptance. Okay, so can anyone tell me why using a finite date can be problematic?
Because
Because counters, that's right. You don't know how long it's going to take for you to get an offer accepted. So if you write timeframes into your offer that aren't modified and you have the offer accepted after a certain period of time, well, that finite date might only be 10 days, right? Might give you a 10-day time frame, 5-day, 14 day, any amount of days. Do you think a lender can perform in that time frame? Probably not. So that is why we typically use a time period from the date of acceptance. The most common being 30 days. Okay. The second most common being 45 days. Can you close later or sooner? Absolutely. Okay. Or can you write in your offer fewer days or more days? Absolutely. Yes. If you're going to write anything under 30 days, I want you to check with your buyer's loan professional if they're purchasing with a loan, because the most important factor in here, the thing that takes the longest, is formal loan approval. So you need to make sure that the buyer's lender can actually perform in this less than 30-day time frame. Once timeframes get beyond 30 days, they are less attractive to sellers, typically, unless they want a long escrow for some reason, right? I want you to start thinking about these things and asking listing agent when you make offers, hey, you know, what kind of closing period does the seller want? That may or may not work for your buyer, but you need to know, because you want to try to write your offer for acceptance if you can. So if the seller wants a 60-day escrow and your buyer's okay with that, if you asked, you can write that into your offer, less chance that there's a term that needs to be countered, right? You'll probably still get a counter offer for something, but I always do my best to write for acceptance. Yes.
What about all cash? How long does it take? I mean, what do you write for close?
It depends on the city. So for an all cash offer, how quickly can you close? 10 is the fastest I've ever been able to close anything. And that is mostly because of that LA city building report, that 9A city report I told you about. Yeah. And also that certificate of compliance.
Also, the AB 38 can delay things.
What?
The AB 38, what do you call this? The festival space inspections. AB 38, when it's like,
yeah, but that's only in play if it's in a high fire severity zone.
Yeah.
So what would be a safe thing to do with all cash?
I mean, look, if you're the buyer's agent, the thing that George was just talking about is like the special inspection if a property is located in a high severity fire hazard zone. That's a seller responsibility to get that report out to you, right? So you can make your offer attractive. You can write it as 10 days, but if they can't close, that's on them, right? So as a buyer's agent, I don't really care. I can write 10 days to try to get my offer more attractive and get it accepted. It's going to be the seller delay on that city building report, certificate of compliance, and if necessary, that fire inspection.
Yeah.
So yeah, 10 days. As a listing agent, I like to get my stuff done ahead of time before I go on the market or before I accept an offer. So I've likely already ordered prelim, NHD. I have my seller disclosures, NHD's natural hazard zone disclosure report, that city building report. I've ordered all of this stuff already. So it's probably cutting it close, but as a listing agent, I can generally get 10 days done. But, you know, if a seller is living in a property, they may not want to do that. So again, you can do it in 10 days, but always ask the listing agent what the seller's preference is. Yes. Yeah, you can find it in KW Command in the opportunities section under transactions, or you can see Brian Chung, our transaction coordinator, and get a transaction checklist. However, it won't always say the city things. It might say optional for the stuff that we're like the areas we're involved in typically, you know, like City of LA. But if you're doing something in some other city, our office wouldn't necessarily know. So if you're concerned about what extra requirements, if any, might be in play in a certain city, you can generally pick up the phone, call a KW office in that city, ask to speak to the escrow officer. They're going to know. Okay, the in-house escrow officer. And most escrow officers will know anyways, or know where to look for you. But I think an in-house KW is going to be more likely to take the time and be warm with you. All right. Expiration of offer. So if you leave this blank, the way it's written is 3 calendar days after all buyer signatures. So the latest date a buyer signs, let's say one buyer signs on Monday, one signs on Tuesday, everything's going to be from Tuesday. They both sign on Monday. It's from Monday. So 3 calendar days after the last buyer's signature at 5 p.m. Okay, if you leave it alone. You can write it sooner or later. In this instance, I knew this Breezy was going to try to shop my offer, and I gave her a good one, so I gave her very little time.
That's nothing to do with the contract, right?
It's just for this. Counter offers have a section like this on all of them. So you can leave it alone or modify it separately on any of them.
Okay, so from some of my experience, when you write in like a tight expiration time or whatever, or you modify it, I mean, they don't always.
Yeah, I don't care. As a listing agent, I don't care if I have more than one offer. If I only have one offer, I might care. Because then I don't have the chance of issuing a multiple counter offer, which can often get me better terms and pricing for my sellers. But yes, if I'm a listing agent and I have 5 offers, I don't give a fuck that you wrote tomorrow at noon.
Yeah,
I'll get back to you when I get back to you. Only when I counter you, I have to say buyer offer is hereby, expiration of buyer counter offer is hereby extended to blah, blah, blah. Yeah. I put this in, I was the only offer. I knew like this worked for my situation.
They were to counter you, and let's say they got back to you July 14th.
Oh, they did. They got back to me after the expiration and they didn't put that extension. So I actually countered back and I added that.
What did you just say?
Expiration of buyer's offer is hereby extended to whatever day and time. Yeah. All right. Initial deposit amount. Can anyone tell me what is the standard percentage of the purchase price? 3. Yeah. Can you do more or less? Absolutely. Less looks weaker, more looks stronger. But what you need to know is that it's not as simple as this, but from a basis starting point, this is the amount of money that your buyer risks losing if they lift all of their contingencies. Their contingencies are legal protections they have in which they can cancel and get this money back. But if they lift all of them and fail to close escrow, happens very rarely. I've seen it once in 20 years. No, twice. This is the dollar amount. So offering more, unless you really need to do so to make the offer attractive, is not necessary, right? It's just not necessary. You don't need to risk more money. And this is not your total down payment either. I see that a lot of times as mistakes on offers. So if someone is putting 20% down and getting an 80% loan, 20% does not go here. 3% goes here, and there's another section where that remaining 17% is going to go. Does that make sense? Okay. All right. This is a contingency deadline for your buyers. It's a really important one. It kind of sets the tone for the rest of your transaction because the buyer getting their earnest money deposit, also referred to as EMD or initial deposit, it's their sign of seriousness. It's the collateral. And it is a special time frame because it is the only one based on business days from date of acceptance. Can anyone tell me why? Because banks are not open on Sundays or holidays, right? So if I wrote an offer and it was accepted on Saturday after 2 p.m. on a holiday weekend, it's very likely that my buyer, even trying their best, wouldn't be able to get their money to escrow, okay? Escrow only accepts wire transfers, guys, okay? I'm dating myself, but I used to be an escrow officer and we used to take cashier's checks. I think we even took cash once, but that doesn't happen anymore. Just doesn't happen anymore. Also, just a little note for you. A lot of times banks require a buyer to go into a branch physically to wire large dollar amounts. Okay, so make sure your buyer calls their bank and doesn't expect to just be able to send a wire online from the comfort of their home or their office. They might have to actually go. Wire cutoff times are early in the day too. So let's say your buyer waits until day 3, business day 3, to wire their funds, but they go at 12, 1, or 2 p.m. Escrow is not going to receive that deposit until the following day, so technically you're late. So advise your clients to go early in the morning, and that sooner in that 3-day time frame is better than later. All right, increased deposit. So an increased deposit is a way to make an offer more attractive maybe, and you can do it one of 2 ways. You can put it on a finite date, which is risky because we can't control when the offer is going to be accepted. You can put it on a time frame from date of acceptance, or the way that I like to do it, upon an event. This says upon removal of all contingencies. That's a major event, right? I oftentimes, because increased deposit, the purpose of it is to make my buyer offer look stronger. I will often say, you know, upon removal of the investigation contingency. Okay, that's a people erroneously call that a physical all the time, but physical is just one finger on the hand of that contingency. And we'll talk more about that. Okay, so what's important to know is that an increased deposit isn't necessarily up for grabs like an earnest money deposit is, unless you use par form DID. Okay. It has language that makes it clear whether or not this increased deposit money is available as collateral in the case the buyer lifts all their contingencies and fails to close, like this earnest money deposit automatically is. So you modify this form to make that intention clear.
You use that? You do increased deposit on most of your RPAs?
No. Very rarely do I do it. Yeah. Loan amount. So if your buyer is purchasing with a loan, in this instance, we have an 80% loan, you will enter the dollar amount in here and will automatically calculate the percentage for you. Okay. And the way that the contract is written, it says fixed rate, unless you modify it to be an initial adjustable rate. This is not super important because likely your buyer has not decided what kind of loan they're going to have yet. And just so you know, loan rates change every single day. Okay, every single day. So not super important. By the time that anyone else figures out if a buyer's loan structure has changed, loan documents are generally out anyways, and no one cares. Okay, but you cannot write offers as all cash where the buyer is obtaining a loan. There is a way to do it optionally where you can say and show that the buyer has the ability to purchase all cash, but reserves the right to obtain financing with no contingency protection. Okay, and that gives you almost the strength of a cash offer, reserving the right for the buyer to get a loan. A lot of investor buyers purchase this way. Okay, and when we come to this section, I'll give you the language I use in the case that I write an offer like that. All right.
Thank you.
You're welcome. So if you have an FHA loan or a VA loan, I'm not going to go into that. They are very special loan programs. They are rare because there are limits on the loan amount, and our sales prices in our area are very high and oftentimes box those types of loans out. But if you do either of these types of loans, please see someone like myself, Mike Rosales, your mentor, to discuss. Okay, and that buyer's lender is going to become your new best friend. So you better make sure they like you, because you're going to need a lot of their help to understand what's going on here. And most agents don't understand the process and terms for these types of loans, and they generally don't close on time. And because agents don't understand them, they think they're weird, they think they're more difficult, and in some aspects they are. They often want your buyer to pay to play. So this type of loan, a lot of times a listing agent is expecting a larger dollar amount in order to deal with the extra issues caused by this type of loan. Okay. Is that fair? No, not necessarily, but that is kind of industry standard. Okay, additional financed amount. So a buyer can have more than one loan. Again, you're not going to know what your buyer's loan structure is at the time you write an offer. So this is very rarely used, even if the buyer ends up with a secondary loan. Occupancy type, very important. The way our contract is written, it says primary, meaning this is going to be the home of the buyer. Okay. If it's going to be secondary, like a vacation home, yeah, it's going to be their home, but not their primary. Check secondary. Or if they're purchasing this to rent, you need to mark the contract to say so. All right. So after you put in your earnest money, your purchase price, your offer price, your EMD, and your loan amount, the balance will automatically populate here for what's called the balance of down payment or buyer closing funds. Double check yourself here to make sure your purchase price total on this line matches what you meant to write into your offer price. I am the queen of one or too few zeros. Okay, so, you know, don't want to make it 18 million and, you know, nobody's going to accept 180. So be careful, double check yourself. Huh? Yeah.
loan before the buyer funds the
No, technically they're not supposed to.
so which is the right sequence?
The right sequence for, okay, so this is really off topic, but the buyer puts in their closing funds. Most lenders, unless it's a very, very lax lender for some reason or hard money, and again, being really relaxed, and most lenders, we know they're not relaxed, okay? They will not fund a loan until escrow has received the buyer's closing funds. Okay, so it's buyer closing funds only after is funding. It's usually a condition of funding. Okay. All right, seller credit, if any, to buyer. How many of you have ever heard of a seller agreeing to a credit up front on an escrow?
I had a situation like that.
Yeah, it's very, very rare. Very, very rare.
What do you mean by I mean, they'll take sometimes.
Yeah, what if they say, I have a termite report, it's $2,000, we'll pay for it?
Oh.
You know what? Yes, it does, but closing costs mean you bring in less cash, meaning the buyer will have more cash to make that repair or whatever after. I probably would not, I wouldn't mess with this credit, because really if I'm after a credit, I want to do it in inspection negotiations. If they're saying, oh, we'll pay for the $2,000 termite report, I'm going to just drop the offer price down 2K. Why would this be advantageous to my buyer and to the seller? Lower closing costs. Lower tax rate, not a ton, but hey, take what you can get, right?
So, Christen,
yes.
What if they wrote it like an MLS? You see that the seller will pay for the home warranty.
Nope.
No.
That's not a credit. We will go over home warranty. It's part of the contract. Yeah. Okay. Verification of all cash. So if you've checked all cash and you're submitting an all cash offer, you must have proof of the whole purchase price plus closing costs accompany your offer, okay? Or modify this to say it will come within blank days after acceptance, but there is no listing agent and seller in the world who's going to accept an offer and take their property off the market if they haven't seen proof that your buyer can actually buy it, okay? So those funky clients who don't want to give you proof of funds, I'm sorry, that doesn't work. You can have alternative methods like a letter from their banking institution saying they have, a dollar amount higher than the offer price on deposit with them. That happens sometimes with high net worth people, but you need to have verification of funds. Okay. Now, not all cash being more common, verification of down payment and closing costs. So down payment includes EMD, okay, closing funds, so they're total down. So if we're using this RPA as an example where they're putting 20% down and getting an 80% loan, I need to see proof of funds for 20% of the purchase price plus closing costs. And for a buyer, they're generally between 1.5% to 2%. I always overestimate a little bit. Okay, so let's say the property is $1 million. 1.5% of $1 million is 15K, right? So I need to see 200 plus 15K, 215K. Most listing agents are not going to be that big of a stickler on it, but if you're showing proof of funds that is really just close to the purchase price, I'm a little concerned as listing agent, and I might want to see proof of funds for more, okay? When I'm weighing all of my offers out, when I have multiples, I feel really good about the ones who show me massive proof of funds. And as a buyer's agent, I tell my buyers, give me big proof of funds. Let's show them you're financially solid, right? You'll have the buyers who are like, oh, but then they'll think I'll pay more. And I'm like, no, because they'll know you don't have a dumb agent who will not let you pay more for the property than it's worth. Just because you have it doesn't mean you're stupid enough to give it to them. Okay, yes.
Which items changes, like why?
That's way off topic. We'll have to talk about that another time. Or you can talk to maybe Pele about that. Yeah. Okay. Verification of loan application. Okay, this is the pre-qualification letter or pre-approval letter from the lender. Okay, I'm going to tell you the differences, but most people don't know. It should, if your buyer's purchasing with a loan, it should 100% be attached to the offer. Because again, why would a seller accept an offer from a buyer who can't even prove that they've spoken with a loan professional, right? So pre-qualification can be just a conversation. It can be simple with the lender, where the lender tells the buyer, yes, you can purchase this, and they'll give a letter. Pre-approval generally means there's been a loan application and the lenders received some kind of documentation from the buyer, but not yet run their credit report. Okay. Most agents do not know the difference between pre-qualification and pre-approval. Okay. They don't. So even if I only have pre-qualification, I write pre-approval, I check pre-approval. I send my buyers to one lender, which by the way, you're not supposed to do. You're supposed to give them 3. And he's super solid, super solid. Did my loan, did my grandparents, my family. He's never let me down. If he says that the buyer is qualified to buy a certain amount, I know that it's legitimate, but it's taken me, it took me 13 years to find that person. So be careful.
But Christen, you recommend that we get the pre-approval?
Fully underwritten pre-approval, also referred to as DU. So you'll see sometimes that listing agents want a DU to accompany the offer. That stands for direct underwriting. This means credit has been pulled. Their application has been run through the Fannie Mae, Freddie Mac system or whatever, and it's popped back for conditional approval from those institutions. This is not common because every time this happens, this is a hard credit check. Okay. And especially like in a seller's market where buyers are writing offers constantly, you don't want to do this for every single offer that you write. So a lot of times I will submit my offer, even if they say DU, and I'll have the phone conversation. Look, if you're telling me we're going to get it, I'll get DU for you, but I'm not going to have my buyer have their credit pulled unless we know that this is legitimately going to happen. But you're welcome to speak to the lender. We can give you a copy of the loan application if you want. We can the lender can tell you what the credit score is. But if you tell me we're going to get this, or just give me a counter that acceptance, counter back that DU, a buyer to provide DU. If that's the only term we have left, we'll pull it because then we can accept.
So I have a question. So like, let's say you write an offer on a property and it's for $2 million, and they do get and do a DU, and then it falls apart, and then they find another property and it's for $2 million, and they're still working with the same lender. Can you say that they're fully underwritten?
You can say that they're fully underwritten, but here's the thing. If it was from 2-3 months ago, a lot can happen with credit scores and financial situations. And depending upon how anal the listing agent is, they may or may not accept it. Yeah. Okay, additional financing terms. Remember, I told you I was going to tell you about the language that I use. Sorry, I skipped over this. When I have a client who can purchase cash, but wants the option to decide if they want to use a loan during the course of escrow. So that language, and I'm going to pull up the chat box and type this for you guys at home, is buyer reserves the right to obtain contingency-free financing at their sole discretion. Okay? Buyer reserves the right to obtain contingency-free financing at their sole discretion. All right. Final verification of condition, also referred to as final walkthrough. The purpose of this appointment, it's handled typically within 5 days prior to close, and I recommend that you keep it on that time frame. There's a fine balance. A lot of damage can occur when a seller moves their furniture out of a home, or a stager moves things out of a home. Okay, so I want to see the home once it's empty, but prior to the lender funding the loan. That doesn't always happen. I can't always get that timing right with everyone's schedule. Sometimes the sellers are waiting until the last moment, but if at all possible, that is my sweet spot in between. Why is that? It's because I don't want the lender to fund the loan. If we find huge damage, we want to make sure that that gets rectified before we commit to the funding and to the loan. Okay. A lot of times this is actually just a feel-good appointment. You can also verify repairs that maybe were negotiated during the escrow at this time. However, be a good buyer's agent you should probably check on those repairs prior to this time. Doesn't give you a whole lot of time to rectify any problems, if there are any. Okay. But yeah, a lot of times this is just a feel-good appointment. Come on in one more time, see the thing that you bought that made you super poor, and bring your friends and family if you want. This should be a short appointment. So I preface this with my buyers because a lot of them want to hang out there for an hour and a half, have people stop by to measure blinds. No, no, no. It's not time for that yet. This is a feel-good appointment and to verify that the property is in the same condition as the time we made the offer. And if we haven't already, verify that repairs have been made in accordance with the terms of any negotiation we had. Okay, assignment request. Okay. An assignment is when a buyer assigns the purchase to the name of an entity or difference in buyer name. Okay, so let's say I am a buyer, my agent makes an offer, it gets accepted, and halfway through the escrow, we decide that, oh, I can get a much better interest rate on a loan if my significant other also purchases the home and goes on the loan with me. Adding him would be an assignment, okay? That's a normal assignment. Let's say I have a trust. My lender says, oh yeah, Kristen, you can take title and do the loan in the name of your trust. That is rare, but it can happen. I would do an assignment to my trust. What is not really legitimate, and this is what's called wholesaling, okay, this is illegal in the state of California, is I go make an offer on a listing. It gets accepted. I have no intention of purchasing it ever, but I know I got it for a great term and I can go shop it to someone else. I'm selling my escrow. I'm locking up that property fraudulently under the guise that I'm going to purchase it with the intention of selling my sale to someone else. That's not legal. It does still happen. I'm having it happen on one of my listings right now, but I'm fine with it. I don't care who buys it. I just want it to close. But I had to talk to my seller about it and ask them why and whatever, just to make sure they were solid, right? Let's see. Contingencies. Okay. So contingencies again.
Find out about that, like on this deal that you're, so then do you?
The agent was honest and was like, hey, Kristen, do you care if we do this? And I was like, I don't care. Just close it, please. Maybe, because if the person I saw proof of funds from and all of that isn't still involved, but usually they are, then I would be concerned. In this instance, I didn't even think this listing was sellable. I thought it might be my first listing I ever didn't sell. I'm like, I don't even care. It's like Hail Mary. I don't care what happens. Just keep on going. Yes, 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 go. All the way down the field, go. Let's see here. Okay, so again, contingencies are legal protections giving the buyer the right to cancel based on this type of contingency within a time frame that's contractually identified in our offer or counter offers. So the first one listed is loan. Okay, the most common time frame for a loan contingency is 14 to 17 days. Actually, that's not true. 14 to 21. Okay. Industry standard is 14 to 17. In our area, it's more competitive. 21 is fairly long. In a competitive market or in a multiple offer situation, 21 seems long. If your buyer's lender is telling you they need 21, either your buyer's income isn't solid or you have a lazy AF lender. Figure out which one and try to get your buyer to a different lender if you have that AF.
If it's a cash, it's a no loan contingency.
That's right. In this instance, I had a loan, but no loan contingency. Why? Because my buyer was a rock star who was significantly underbuying, could have bought it cash, and she was working with my preferred lender, who said, don't worry, Kristen, you don't even need a loan contingency. She's going to get any loan she wants. I wish they were all like that. Okay, so if you're going to do less than 17 days, you need to check with your buyer's lender to make sure they're able to perform. You don't get to just shorten this contingency without asking. Okay, do not do that. You're setting yourself up for failure. All right, so loan and appraisal contingency are interlinked. I always want to see a shorter appraisal contingency, if there is one, then there is a loan contingency. And the reason for this is because an appraisal has to be done, typed, received by the bank. There's a special appraisal review department at every bank that takes up to 3 days to review it. Only then does it go back to the loan officer or mortgage broker who can work on formal loan approval. So I always want to see 3 to 4 days less on that appraisal contingency. And the reason for this is your wild card in the transaction is almost always a buyer's lender if it's not someone who cares about you and you don't trust. It's almost always that lender. You're going to babysit them so hard. So if I have 17-day appraisal and 70-day loan in here, the way that it's written, the person doing the appraisal and ordering it is probably a loan processor. It's not my loan officer. They're not thinking about how this time frame affects this time frame. So if they don't get the appraisal done until day 15, and it doesn't even go back for 5 days, we can't start working on formal loan approval until after that contingency's already expired. So 3 or 4 days fewer here, so that whatever idiot's ordering this appraisal gets it done for you in the time frame you need to get this done in the time frame that's written into your contract. Can you have an appraisal or loan without the contingency? 100%. There are risks involved. If you want to learn about those, watch my class on how to make your buyer offer more attractive. Okay. There's a special consideration here also. Appraisal contingency upon appraised value at minimum of purchase price or blank dollars. I'm not going to go into this specifically, but in a really competitive situation, the property might not appraise for purchase price, and maybe your buyer is actually okay with coming in with more money in the case it doesn't appraise. That's when this is used, but make sure you see someone who knows what they're doing before you use this section, okay? Investigation of property, okay? Investigation contingency, almost always erroneously referred to as physical inspection contingency. That is very, very, very wrong. And I love it when people write physical in on counter offers, because if this is investigation, this is physical, insurability, all these different like fingers on my hand, right? So if they're only modifying this finger, it technically means I still have all the time I wanted within the investigation contingency, just not that physical branch. If you want to learn more about that, look at a contingency removal form, look at investigation contingency, and look at all the little subcategories there. Yes. We'll talk about that in a second. We'll talk about that in a minute. Okay. All right. Investigation of property for a condo can be done in as short as 7 days, maybe even 5 if you're lucky to get an escrow opened on like a Monday and your inspector happens to be available, but that's not usually the case. So I'd write 7 here. On a single family residence, generally 10 to 14 days, depending upon size and what's there, okay? In inspections and negotiations class, I discuss what inspections I would recommend at a minimum for my clients, depending upon the type of property. So if you want to learn more about that, you can watch that class. Again, where are my classes located, recorded, guys? Great. What do you have to do? Just look for my name. Just search my name. Okay. Informational access to the property. Sellers and listing agents almost always ignore this section. So if you have a 10-day investigation contingency and you've lifted it, but on day 12, your buyer wants to go in for some reason, they don't have any contractual protection if they have more inspections and reports, but they can go in. They can go in for up to 17 days. This is basically just access to the property. Okay. Review of seller documents, okay? I take seller documents, okay, to mean something other than seller disclosures. And I'll tell you why. No, they did change this. And you'll see if you've ever taken this class before, or you watch my videos, this might be the 622 revision. So seller documents, no, it is here. Just no, let's see. Seller occupied or vacant units, document fees. That is what they changed. Okay, so I couldn't tell the difference between seller documents and seller disclosures before. Okay, so seller documents, I think it's more broad category because we have seller reports as well as the disclosures, like natural hazard zone disclosure report. Okay, technically it's the seller's responsibility to provide preliminary title report to the buyer, not the title company. These are all companies doing performing acts on behalf of the seller to give to the buyer, including seller disclosures, but that's between listing agent and seller, right, to deliver those. So review of seller documents includes delivery and buyer review. So the buyer has a contingency, and when they need to get those things back, if they require signatures to the sellers, or sometimes escrow. It's a little confusing because escrow comes in and facilitates and orders a lot of these things and sends them out for signatures, sometimes without ever even telling us. Okay. Yes.
So after we provide the initial money deposit, so we have 17 days after that with all these documents. I mean, to literally
Nope.
decide if we want the house or no.
Nope. Whatever is written in here.
So why wouldn't someone do less just because to make it look attractive?
Yeah, 17 days, way too long. I mean, why would you need 17 days to review a seller disclosure package? Also, you want them to be given to you quickly because maybe there's something in there that makes a buyer not even want to buy it. Why would you waste money and time on inspections and appraisal and all of that if you find something like that? Or in my instance, if I'm representing the buyer, I really want those seller disclosures before I inspect, because if there's anything in there, we're like, what does that mean? We need to look at this closer. I have time to get a specialty inspector, which I might not normally set up, or have my general inspector or whoever is already going out for what I call my core inspections to point it out to them and be like, hey, can you take a really close look at this? They said there was a leak in this area before. We want to make sure it was all mediated properly, right? But it's to protect my buyer's money from the inspections and from appraisal.
Okay, but can you legally ask for them before you give the initial money deposit?
I mean, if you want to write a 1 day or 2 day contingency in here and the seller accepts, of course you can legally ask. But if most listing agents don't get their disclosure signed before they enter escrow, that's never going to happen. But if they have them, I don't see why a listing agent wouldn't be happy to hand them over. So yeah, can you legally ask? Yeah, but it might not happen. It might keep you from not getting your offer accepted.
Do timeframes start on seller's disclosures based upon delivery?
All timeframes on all contingencies are counted from date of acceptance. Yeah. However, if the seller is supposed to provide any report or disclosure, even if the buyer's already lifted the contingency relating to that, if they deliver anything after the expiration or after a buyer's lifted their contingency, the buyer has 5 additional days to review that, and their right for cancellation is reinstated without any documentation. So if I have a 7-day contingency in here for a review of seller documents, and on day 8, the listing agent sends them to me, I have 5 additional days before they can serve me a notice to perform or demand I remove that contingency. And if I've already removed that contingency, I automatically have 5 days for my buyer to change their mind.
Is there a form that
if you deliver it late or receive it late? No. But if you lift a contingency, there's a form. It's called CR. And if you're lifting any contingencies with the offer, you can check this box and add a CR. Okay. Common interest disclosures. These are HOA docs, guys. HOA docs are generally handled by HOA management companies who are late and don't care. They are like the DMV of service providers. And we all know what that's like, right? So I tend not to, if my properties, and this is obviously only required if the property's planned unit development or condo. It's not required for single family. That's not true. Single families can have HOAs, but it's really, really rare, and most of them are informal and there's no docs required. You have to check. I know that sounds weird. I just want to put it out there that there's almost always a few little minor, rare exceptions to almost everything in real estate.
A mobile home also.
Maybe a mobile home is, we can only be involved in real estate transactions with mobile homes if the owner actually owns the land upon which the mobile home sits. Otherwise, it's like a car purchase. It's not like a home sale. So yeah, a mobile home, if it's set up as an HOA where they all have undivided interests in the common areas, the land upon which the property sits, then yes, they should have HOA documents.
What I was going to ask about the seller disclosures
Mhm.
is, let's say you get under contract, you receive the seller's disclosures. Is there a form if based upon reviewing the seller's disclosures that they want to terminate, or do you just use like a termination?
We have a cancellation document. Yeah, and it has language on there that specifies buyer is exercising their right to cancel under paragraph whatever of the purchase agreement, and you would check the corresponding one. Whether that's seller disclosures, which is part of investigation, or whatnot. Okay. Anyway, so it's HOA docs almost always come late. I just leave it at 17, or I might write 10 in there, but I expect that it's going to come at 17. And again, as a buyer's agent, do I care if it comes late? Absolutely not, because that gives me, my buyer, additional time to change their mind if they want to. I don't advertise it to my buyer that way, right? But all it does is give us options in the case that something goes wrong. Okay, review of leased or liened items. So a lot of times something like a solar panel, water softener system, propane tank is not actually owned by the property owner, it's leased. If that's the case, there are documents that are actually recorded. There's a payoff or demand request transferring title from the former owner to the buyer that need to be recorded and given to escrow. Obviously, your buyer needs to know if there's any financial implications for them. Sometimes a leased item is not even transferable. The seller has to actually pay off the full balance before they can sell their home, very rarely, but this can cause problems for the sale of a home. So if you see anything like that, ask if the owner owns them. And if they don't, push for this right away. I generally want to see this within 3 days of acceptance.
So if
Okay,
they do own
buyer's
it,
property. This section here, L8, means that you're making an offer on behalf of your seller, which is contingent upon them in some respect selling the property that they own. This is considered a weak type of offer. It can be stronger, but if it's strong, there's probably no point on making it contingent. And I did teach recently a class on contingent offers. So again, if you want to learn about contingent offers, it's really complex. The form for making a contingent offer is very complex. Watch that class. So I know these classes are not on your required list of courses materials, but when I met with all of you one-on-one, for the most part, I let you know that I teach classes outside of the required courses. And if I do, they're probably really important for you to watch. And these are the extra special little things that you can learn by spending your time with those. All right, time of possession. The way that our contract is written, it says that, and this is different as of this year, possession should be delivered to the buyer on the day we close upon notice of recordation. Okay. Confirmation of closing. Did we record? Escrow title will let you know. Okay. Or if you check the box 6 p.m. It used to be 6 p.m. on the day of closing. I actually prefer 6 p.m. as a buyer's agent and as a seller's agent. And that is because I might already have appointments that day. It might, my escrow might close a day or two early or a day or two late. That is very, very common. In fact, more common than closing on time. And so if I say keys are going to be delivered or possession will be delivered to buyer upon notice of recordation, well, that puts me in an awful bind if I can't get the keys over or pick the keys up when I need to, when that happens, right? And that can happen anytime from 9 a.m. until like 4 p.m. Okay, so I do like to say 6 p.m. Seller occupied or vacant units. So we can have a condo or a single family resident that is occupied by a tenant. That would be handled in the lower section here. And there's a form for that. So if you know that there's a tenant in the property, whether or not it's going to be delivered vacant, you need the form TOPA. And you can indicate there in your in this form and make it part of your offer. Oh, this offer is contingent upon that tenant leaving a certain number of days prior to our scheduled close of escrow date and that sort of thing. As far as the seller occupied or vacant units, okay, close of escrow date or checked below is for what's commonly referred to as a leaseback or a rent back. Very, very common in our business. Okay, leaseback and rent back mean the same thing, but There are two very big distinctions based upon the time frame the seller needs to be in the property after the close of escrow. Okay. If it is fewer than 29 days, car form SIP is used. If it is 30 or more days, which a lot of lenders have a problem with more than 30 days, some 45. So check with the lender if the, check with your buyer's lender if the listing agent's telling you their client needs a 60-day lease back or even a 35 or 40-day lease back. Make sure the buyer's lender is okay with that. We're going to use car form RLAS, residential lease after sale, if it's 30 or more days. I highly encourage you, if someone's asking for 30 days, tell them, no, can we do 29? Why is that? Why do I want 29 days? Why do I want an SIP?
Otherwise it becomes like
yeah, thank you. 30 or more days in the state of California, whether or not someone's squatting, paying rent or not, creates a legal landlord and tenancy relationship. So if the seller is in possession for 35 days, but then on day 35 decides, I'm not moving out. What does the buyer have to do to get them out? They have to go through formal eviction. These forms are very important also. It talks about any kind of compensation that the leaseback is for. It also goes over who maintains and pays for what during the time the seller is living in the property, but now the new owner owns it.
Who helps us with that? The lender? I mean,
what do you mean?
Fill out these forms.
No, these are actually super simple forms. Take a look at them if you want. They are very clear and straightforward. You should be able to figure this out on your own very easily. And if not, come and see me. Okay, so seller delivery of documents. We talked about this already. So seller delivery of documents is different than review. Remember, I talked to you about review of seller documents, meaning we also need to sign those and get them back within a certain time frame. So seller delivery of documents is the one that's more like what used to be called seller disclosure contingency in our old residential purchase agreement. This is the time frame they have to give the documents to us. So this is the one I want short, and then I want a reasonable amount of time for my buyer to review the documents and us to return them. Oops. Sign and return escrow holder provisions and instructions. Everyone ignores this. It's in here because what happens is buyers and sellers don't respond to escrow. Tell your clients to respond to escrow. They can move heaven, earth, and all the stars for them, okay? And then, you know, it affects the ability for the loan to get approved if they don't return things to escrow. Escrow can't do their job, and think of them as the wedding coordinator for the whole deal, okay? So what happens is, yeah, buyers and sellers ignore escrow. That's why this is in here. So just advise your clients, please take care of all, respond to escrow immediately about anything they need. Return their documents immediately.
I have up to 5 days to return anything to escrow. Wow.
Yeah, but you should do it sooner. Yeah, and no one pays attention to this. I've never seen this enforced, but it's in here probably because escrow companies were complaining because everyone does everything, doesn't give them anything back. And then at the 11th hour, like a Friday at 4 p.m. is like, oh, why don't we have this? And escrow's like, well, I've asked you 6 times for these documents and you haven't returned them, so I can't do anything. So everyone's like, oh, great. Now it's, you know, 5:45 p.m. Here you go, escrow. You have 15 minutes to get something that should take 3 hours done. Not very cool, right? That's why. I only know this because I was escrow. Nobody understands what escrow does. Be nice to them. They make very little money and they work their ass off. And they know if you ever need information, they're a really good source too. Time to pay fees for ordering HOA docs. That is what it sounds like. Install smoke detector, smoke alarm, CO2 detectors, and water heater bracing. Okay, so these are California state retrofitting requirements. We talked about the ones for City of Los Angeles that are more encompassing, and that form that we need from that is called what? Certificate of Compliance.
9A.
9A is the building report. No, Certificate of Compliance for City of LA. But here are the state requirements. And this was never in our contract for the work to be done in a certain time frame, okay? It's important that this work is done quickly if you're a listing agent because it can mess up an appraisal if these things aren't done. It can hold up the buyer's appraisal, okay? So if you're a listing agent, you want to have the retrofitting if you're City of LA done right away. If you aren't in the City of LA, how do you find out if these things are all in compliance? Well, generally the buyer's general inspector will tell you, and it is expected that the seller takes care of this. This is not optional stuff, okay? It is negotiable about who pays for it, but I do not advise you to have your buyer offer to pay for these things because you have no idea what it will cost, if anything.
Yeah.
So be on it. There's a time frame for it now. Evidence of representative authority. Okay, so if I'm making an offer in the name of Corporation LLC Trust, there's a special document called an RCSD, Representative Capacity Signature Disclosure. There's one for buyer, one for seller. So at the end of that acronym, it's either -S or -B. Okay. What it does, it says and shows how me, Christen Tull, is related to and can act legally on behalf of the Christen Tull Family Trust dated blah, blah, blah. That's all it is. That way, we don't write the name of an entity that doesn't yet exist. Or if we do, we fix that real quick. And that way I'm not, accidentally or knowingly, illegally acting on behalf of a trust I don't have the authority to act on behalf of, right? So for instance, like my dad has me as successor trustee in his trust, but I'm successor trustee. I can't act on behalf of my father unless he is mentally incapable or passes, right? That is the only time I become authorized to act on behalf of the trust. Until then, the trust says that only my father can sign on behalf of the trust, right? So this document just outlines who I am in relation to this entity and what authority I have. And also you're gonna have to get a copy of documents that prove that for title and escrow, but that's not necessary at this point yet. All right, items included and excluded in sales are called inclusions and exclusions. Be very careful, read these carefully. Look at pictures. I hope you aren't often writing offers on property you do not see, okay? So you're gonna check what the buyer wants to be left at the property, okay? Or if something should normally be included, but the buyer doesn't want it to be there, they can write excluded items. When in doubt, or not even in doubt, just be really clear. So I'll tell you, I recently had a buyer sale where there was a Murphy bed. The legal definition of items that are included with a property are things that are permanently affixed. Is a Murphy bed permanently affixed to the wall? It is. But this was out of area and the agents were absolutely stupid, so I wrote it in there anyways as an inclusion. The fucking listing agent took it. The seller was smart enough to know that it stayed based on the contract, but the listing agent wanted it, thought the seller just left it there on accident and took it and brought it to her house. And oh, it was a battle. I got that shit back, but it was a battle. And she was like, it's not included. It wasn't permanently affixed to the wall. And I was like, I don't give a fuck if it was or it wasn't. I wrote it into inclusions. Here's a copy of the contract. Return it now or I'm going to go after your license. I didn't start off that way. Believe me, there was a lot of pleasant conversation before that. There was like 20 pleasant conversations before that. I sent her a screenshot of that section of the contract. She was like, oh, that was an error and you knew it. I was like, no, it wasn't. I fucking wrote it on purpose. She's like, I think you're tricking me. And I'm like, I'm sorry you don't know how to read a contract. I don't know how that's tricking you. By putting it on there, I made it clear.
Because like you don't check something and then your client thinks like, oh, this refrigerator is there or something, like you can end up are you legally required to buy something for your client that's not addressed? No, but they're gonna be pissed at you. You're gonna end up buying stuff if you're not careful about this. Allocation of costs. All right, here we go. NHD report. Required for every transaction in the state, the seller typically pays for it. Why? Because it's a seller disclosure. Because it's a seller's disclosure, I always say to be provided by seller's choice. NHD reps will come in here and try to tell you the opposite and tell you to write in their company because they want to make money. Why would you do that as a buyer's agent? You're putting liability for something that's all seller responsibility on yourself. Do not do that. Let the seller decide what NHD company they want to use. Okay. Smoke alarm, CO2 detectors, water heater bracing. Typically the seller pays for this.
Can the buyer pay for it? Yes, but we don't know how much it's going to cost. It's like writing a blank check. So that's why it's standard that seller pays for it. Okay. Government required point of sale inspections and reports. This is a very general term on purpose because, like I told you, every city can or cannot have additional transfer requirements on top of the state requirements. In City of LA, we do, and that this is referring to something like 9A and certificate of compliance like we have in City of LA. Seller pays for it. Additional transfer requirements, inspections that are required by the city. So in Los Angeles, the 9A LA City Building Report and the certificate of compliance showing retrofitting requirements that are more stringent than the state requirements. So do you always know what these are when you're writing an offer? Not if you're not familiar with the city, that's okay. Just check seller, because the term required means it doesn't matter if you're saying seller. If there's nothing required, there's nothing for them to pay for, right? Okay, government required point of sale corrective remedial actions. Just check seller. You don't need to understand it. You don't need to understand it. It's too big of a conversation. It's just seller. Escrow fees. Standard is for each to pay their own. Who typically decides who the escrow company is? Usually the listing agent. Seller doesn't even know that the listing agent's choosing for them. They just go along with it. But technically the seller should be. So that when I'm working with a seller, I say, hey, I'd like to use the escrow company I typically use with an escrow officer that I like and trust. I'm super picky because I used to do that job. And they're like, oh yeah, fine, good. But in a rare instance, especially with a builder client, they might have a special arrangement with an escrow company where they get like a flat rate or a reduced fee. So it is technically the seller who usually decides. Can the buyer insist or the buyer's agent insist on using their own escrow company? Yes, but it kind of weakens their offer. And if the listing agent, someone like me, I already have escrow open, even though I don't have an accepted offer. They've already done work helping me get things like that 9A building report before I have the accepted offer. So I'm like, sorry, I already have an escrow company involved. Owner's title insurance policy. Who typically decides who the title company is? Listing agent should be seller. But no, not really. It's actually illegal in the state of California for a seller to insist that a buyer obtain title insurance for a certain company. I think I knew that before, but I forgot because our standard in our area is exactly the opposite. It's actually in violation of state law. I still write it the way that is industry standard because I want my buyer offer accepted, right? But technically a seller can't insist that a buyer gets title insurance from a specific title company. Okay, so again,
yeah, buyers agreeing.
Yeah, the buyer's agreeing to it. Buyer's lender title policy. Okay, and the owner's title policy in our area, the seller pays for typically, and the lender title policy, the buyer pays for typically. There is more than one title insurance policy on most sales. If there's a buyer loan, there's a lender policy. If there's no loan, there's not. So the buyer's not paying a title fee in that instance, okay? In Northern California, it is standard for the buyer to pay for the owner's title policy as well. So there are regional differences where we're at and terminology differences even within the same state. So if you start going out of area, I'm just bringing this up so you keep it in mind to be very vigilant and ask people and make sure that you're getting stuff like this right. Okay, county transfer tax. Seller almost always typically pays county transfer tax. In our area, the seller also pays the city transfer tax. Not all cities have transfer tax. If you're unfamiliar, I would default to seller. However, I grew up in South Bay, the beach cities, typically considered Redondo Beach, Hermosa Beach, Manhattan Beach. There's a little idiosyncrasy there. Typically, the buyer and seller split the city transfer taxes there, okay? So when you get a counter offer back saying that they split them, instead of calling up that listing agent and being like, are you crazy? The seller always pays this. Why would my buyer pay it? Probably talk to an escrow officer or someone who's familiar with that area before you do that, right? And also, your buyer never likes to hear that they have to pay for something that they weren't expecting, right? So at least now you know what I know in my minimal knowledge of this is that in South Bay beach cities, typically buyer and seller do split the city transfer tax, not the county. Okay. You're welcome. Seller pays for HOA docs, except for what's called HOA certification. This is for a buyer's lender if there's a loan. That's where the buyer pays for this. Typically, that's handled with escrow and the lender, though. HOA transfer fees. Sometimes an HOA charges a fee for transferring in their own records the ownership of the unit from the seller to the buyer. Typically, the seller pays for this. Private transfer fees can also be a thing with HOAs. Typically, seller pays for it. You don't have to modify anything here. It says that right on here. If there are other fees or costs that are not typical that you want to address in your offer about who pays, there are these free form sections here. I highly recommend that before using any free form section, you see someone very familiar with contract, okay? Because even if it's clear and what you mean is correct, it could have effects on other terms within the contract that you're not aware of. So have someone who really knows contract take a look at it. Okay. Home warranty plan. Typically, a seller pays for a home warranty plan, and the buyer has an allowance that they're not to exceed, and the buyer and buyer's agents would determine who issues that home warranty policy. It is fairly common, though, for a seller to refuse or for a buyer to waive because it doesn't cost that much money, and for whatever reason, sellers see that as much more attractive. I don't advise my buyers to do it unless, you know, we're up against a lot of multiple offers and they're not willing to be really competitive with pricing. All right, other terms. Again, I'll explain this to you. Again, if you use a free form section of the contract, be very careful. So we talked about rent back, lease back, right? 29 days and 30 days. However, at least in our area, it's typical if a seller is paying a buyer for that time that they're living in the property after the close of escrow, it's generally based on what's referred to as PITI, or actual carrying costs. PITI stands for principal, interest, taxes, and insurance. If it's a condo, you might want to add HOA docs and HOA fees in there. Okay. So that way, the seller is covering the buyer's costs during the time that they're living there after close of escrow. However, we don't know what the dollar amount of PITI is going to be. So our industry standard method of compensation to the new owner leaves us with a hole in our contract, okay? So that hole, I work around by using other terms. Buyer to provide seller with up to 29-day leaseback at buyer's actual PITI carrying costs. Seller shall notify buyer at least 15 days prior to close in writing if they choose to exercise this option. Buyer and seller agree to execute CAR form SIP, which I didn't do with my offer because I don't know what the dollar amount is to put on there yet, within 2 days of this notification. Seller shall cover the cost of all home maintenance during any period of leaseback. Okay, so this wording can be modified, but I wanted you to be aware that leaseback compensation poses a problem the way that we do it as our industry standard. And so SIP and RLAS aren't always the go-to method of negotiating that initially with an offer. Does that make any sense? I don't have a dollar amount. I don't know what it's going to be yet because it's going to be based upon the buyer's loan if they have one at close of escrow. For those of you at home.
What do you mean by saying it's buyer's actual PITI? So you go by on yours? Oh, so you, can you explain that? The buyer's PITI?
Yeah, it is principal, interest, taxes, and insurance. That is all the carrying costs. So if I buy a home, every day is called the per diem rate. This is what it costs me to own my home every day. And these are my costs. The principal payment on my loan, the interest payment on my loan, my tax payment to the county tax assessor, and my insurance costs. I have to have an insurance policy.
Sometimes the seller says that they want the seller to stay for 45 days in the house. We want to pay for the ITI.
That's negotiable. It's negotiable. Sometimes the buyer says you can stay here for free. It's not all negotiable, but it is mostly standard for the seller to pay for it at the rate of PITI. Yes.
days or less, then the seller doesn't not consider a landlord.
Then the seller's not considered a tenant.
Oh, sorry, the seller's not. What are
An occupant, a short-term occupant, anything under 30 days. Yep, no tenant rights. That's how you can think of it. 29 or fewer days, no tenant rights. 30 days on, tenant rights. Formal eviction if there's a problem. Never had that happen, thank God. It is what it is. I'll answer that question for you after class, John. Just trying to see so we can wrap up class here because I'm going to lose my voice in a second. I can't teach much longer. If there's anything I really need to go over with you. If you need to attach anything you can't fit on the contract, you're going to use an addendum. If you're writing a backup and not a real offer, you use a backup offer addendum. You check these boxes. They're automatically populated in zip forms and they'll attach and you'll have to fill them out. Okay. These things that are checked here, those are the disclosures we went over at the beginning of class. They're always going to be checked. Yeah, I think that's it. There is a section here I want to show you at the very end. All of these paragraphs, by the way, go into great detail about all of those things that we just reviewed, right? So everything that you modify is at the beginning, and then a full explanation of what that means is in your contract. I highly recommend you read your contracts over and over again. You want to understand them.
Video on this too?
Let's see. Okay, so 2 things. Actually, 3 things. Okay, 3 things. If you use DocuSign plugin to zip forms, liquidated damages, and arbitration, your clients, your buyer clients will oftentimes miss signing because it says an optional field. And so when they just click, click, click and don't pay attention, it doesn't actually get signed. So you have to modify these, highlight them, and make them mandatory sign fields if they intend to sign. And then buyer needs to initial at the very bottom of the last page. A lot of times that gets missed. And if you are countering instead of accepting as a seller, you need to make sure as an agent that you check this box. 33A, seller counter offer. Because a counter offer should accompany a signed contract. The contract should be signed just with this box checked. And then the seller counter offer number 1 attached to it. Or seller multiple counter offer number 1 attached to it. Okay, that's it. That's the bulk of the common errors. Does John, I'll answer your question after I use the restroom. Does anyone have any other questions related to our material for me now?
Nope.
No. Okay, great. Thanks, guys.
Thank you. Have a nice day.
You too. Oh, yeah. See, the office is fucking up all over the place. They're supposed to be taking care of this, the sign-in sheet. Yeah, if you're in the mentorship program, sign in for me. You're welcome. And then anyone who wants me, come to my office in 5 minutes. I'm going to use the restroom. Bye.
Everything will be in one place, or it's 2? What do I do? Let's go. Jonathan to post something for my Insta, so I don't have anything correct to say.
Yeah, thanks, Christen, for what we already got, already started. Really kind of extra. Yeah.
Very cool. Danny, right?
Yeah,
Great meeting, Danny.
yeah.
I'll see you around the office.
Yeah, hopefully I will start working on my Instagram page and it's gonna be a little more appealing and better. Right now, there's nothing new.
Awesome.
Yeah,
Yeah.
I just they push me from every side, but.
Yeah. Yeah.
And what about you? Oh.
Well,
you know.
For about a year.
Already time.
Yeah. So that a partner George Morales.
Okay.
But yeah, pretty much doing business with him, doing a bunch of rentals as well. Feet wet, contact with him, then hopefully from the rentals come next.
Ask me a question about rental. I also kind of started doing my own rental because it seems like some calls were there.
Yeah.
You can work with management company who doesn't get my pay. They don't have pay. So I have a buyer. I have property, and then management company which is the buyer.
Yeah.
These people somehow be fine with the buyer, so they will not give us a security for this job, or
Yeah, put that in the contract. I'm sure that would be fine. The management company doesn't.
no, they don't care. But I may save them money, and I'm thinking, why not?
Exactly. Yeah, I mean, if you for the buyer, put in the contract, that's the one.
Oh, okay. Because I'm thinking about this, and because with the agents, yes, it's understandable thing. They commission.
Yeah, it's tough with the management.
Yeah, it's tough with the management. Okay.
All right, great meeting. Have a good one.
Yes. Thank you. How you doing?
Good, how are you? Good.
You remember me? We were sitting together
Yeah,
day before yesterday.
Yes, right.
Yeah.
And you said you have some rental property?
No. I'm kind of already got some people who want to work with me. They are looking for rental property. And I'm kind of helping them.
Or an apartment house, things like that.
Yeah. Either house or apartment, yes.
Yeah,
But there are several, because I knew already a few things started coming up, which I don't know answer.
yeah,
So
I do a lot for my son, like the big landlord, he has an apartment house. He was there 2 years ago, which is good, but now
which area?
he put a lot in Long Beach. Long Beach is the area, there is a lot of property in Long Beach for selling. Well, I've seen more in Long Beach than other area, but two things